This is the only trading strategy you need in 2026. Use this if you want a higher probability to win your trades. This is the step-by-step process. The first step is a market structure shift. As you see here in this simple example, we have a market structure shift. The second step is a fair value gap. So as you see here, a fair value gap forms before or after the market structure shift, and price comes into the fair value gap. The third step is a reaction from the fair value gap. So when price retraces into the fair value gap, you're looking for a reaction to go long, or if you're on the bearish side, you're looking for a reaction to go short. That's all it is. It's a three-step process. This is the only trading strategy you need. And let's show you a live example that played out today on ES. So as we see here, remember the first step is a market structure shift. So we're looking for a market structure shift. We broke above these highs and these highs right here with these two green candles. So we have our market structure shift. So that's step one. The second step, remember, is a fair value gap. Do you see any fair value gaps before or after price broke structure? Well, yeah, we see fair value gaps that were formed before and after price broke structure. So we'll mark both these fair value gaps out. Now the third step, remember, is a reaction from the fair value gap. So when price retraces into this gap, we're looking for a reaction, in this case, to go long. So as you see, there is a reaction with this green candle. You see price starts reacting going up. So we would set our entry there, set our stop loss below the reaction point, and we set our take profit at a 1 to 2 or at liquidity. In this case, a 1 to 2 is basically at liquidity, so we would have took our take profit up here. You can see price did indeed hit the take profit. This is a very simple strategy, but it is viable for winning high probability trades and making your trades higher probability. So let's look at these steps again. Remember, market structure shift, fair value gap, reaction from the fair value gap. Here's the simple example. I hope you guys enjoyed this video, and I'll see you all in the next one.